fears over the size of Dubai's debt has sent just shockwaves through international markets, with major stocks and oil prices falling sharply. Dubai World, the country's largest conglomerate, wants to suspend payment on its $60 billion debts until May at the earliest. The state-owned flagship investor is behind projects as ambitious as buying up American ports and building Dubai's skyscrapers. The debts are so large, there is concern non-payment could trigger another cycle of world financial turmoil like that following the collapse of Lehman Brothers last year. To discuss this, I'm now joined by The Economist and RT contributor Max Keiser. Max, it's good to see you. How likely is this to trigger another world financial crisis?
Well, this is the beginning of phase 2 of the global credit crisis. I noticed that right now the Greek market is down 7%. So that's telegraphing huge distress in European markets. And don't forget that in Eastern Europe, the huge yet-to-be-revealed losses are going to create another huge wave of this crisis. I got to hand it to Gordon Brown and Alistair Darling over at the UK. They engineered the ownership of Royal Bank of Scotland to be transferred from the private sector to the people in Britain, who now own billions of dollars worth of debt at Dubai ports, and this news that we're just talking about now, a possible default or default on a loan is what it looks like it's shaping up to be. And the people in the UK are now the proud owners of a defunct real estate deal in the Mideast, and they should be used to that by now. All of their real estate in the UK is going belly up, so now they can add some Middle Eastern distressed properties to their portfolio. So Gordon Brown and Alistair Darling have got to be the Beavis and Butthead of the global finance markets. They're truly remarkable in their ability to pick losers.
Well, tough economic times in store for those in the UK. Tell me, Max, just how bad is Dubai's debt problem?
Well, on the surface, it only looks like another $60 or $80 billion is at risk. But at this point, after having gone through many hundreds of billions of dollars of write-offs, every additional 50 or 60 billion starts to cut into the bone of the global financial system. And these governments are at the end of their tether in their ability to keep shoveling more fiat currency onto the bonfire of their gross and inadequate inability to oversight the hedge fund and banking community. And so it's starting to really, phase 2 of this crisis will start to really dig deep in a way that phase 1, as bad as it appeared, was really only superficial if we're going to look at this in the context of what's yet to come. What's yet to come is another huge bankruptcy by a major UK bank. The obvious contenders are the names that we're reading about today, a big U.S. bank, and there are many more bank failures to come. The credit crisis is not even halfway through, getting through, completely eliminating all of the bad debts in the system. And again, these central bankers and politicians around the world have just let the bankers get away with wholesale thieving. I agree with Putin's statement that Bernie Madoff got off light. Meanwhile, everybody else is comparatively not getting any penalty whatsoever, and they're committing crimes on a much larger scale.
Indeed, Max. In fact, there are plenty of people who say that the so-called bailouts in the United States were simply handouts to the banks that just essentially wield so much influence in Washington. Talk to me about a couple of pertinent issues here. How could Dubai's debt damage the price of the dollar and affect the price of oil?
Well, of course, we're seeing that play out right now with a bit of a flight to the dollar and some profits being taken in the gold market. And the gold and the dollar, of course, are trading on an inverse basis. But if you notice, the dollar reaction rally at the moment does not appear to have much oomph behind it. So the U.S. dollar is not really the currency, the defensive currency that it has been over the years. And as it fails to break through to any kind of meaningful new interim high at the moment, more and more central governments are going to say maybe the dollar really is going to be replaced as a global reserve currency. And they, as we know, are continuing to buy gold bullion. India is going to announce another huge gold bullion purchase. China will announce another huge gold bullion purchase. My contacts in Germany at the Bundesbank tell me that Germany is about to announce a big gold bullion purchase. So these central governments are buying gold after decades of selling gold, and the dollar is really the currency that is going to suffer the most going forward. It may have little upticks here and there because there's still a legacy of it being a safe haven currency, but that status is being challenged with every month that goes by. And, of course, the Obama administration has been abominable in allowing Geithner and Summers and the carryovers from the Bush administration to rape and pillage on Wall Street with impunity and just decimate the U.S. economy. Unemployment's still going higher, and nobody seems to want to rein these guys in, and Obama's doing a horrible job at that.
There certainly are a lot of people in Washington and on Wall Street that really have to be called to account for this. When you talk about the big global players who are backing off using the dollar, I mean, it's just painting imagery of rats fleeing a sinking ship. Do you think that it's the sheer size, possibly, of Dubai World that made this collapse inevitable?
Well, you know, it's interesting in the Middle East that Abu Dhabi is not running to the rescue of Dubai. Of course, it's different than on Wall Street when the AIG debts were paid off 100 cents on the dollar with the coercion, the complicity, and the double dealing of Washington and Wall Street. But in the Middle East, in Abu Dhabi, they're saying, no, we don't play that game. We're not going to run to the rescue of Dubai. You've got to sink or swim on your own merits. And so apparently, unless you're really sitting on a kingdom of assets to work with, you are at grave jeopardy of being completely wiped out in this world of fiat currencies and zero accountability.
So, Max, I mean, you're touching down on the Middle East. Can we expect a potential domino effect through the Middle East with other companies collapsing as well?
I said at the beginning of this year that Dubai was going to go belly up, effectively. And I also predicted that Abu Dhabi would effectively come in and after the crunch and affect a merger, if you will, picking up those assets on the cheap. So there are predators in the Middle East looking for the weak links, and they're going to be picking them off. It's simple as we see the predatory behavior all over the world. Now, when you go back last year, when oil, remember oil got up to $147 a barrel, it was used as collateral to finance an incredible Ponzi scheme in the Middle East. And now that Ponzi scheme is collapsing. But there are players waiting on the sidelines to move in and snap up bargains. But they're not going to do what you see happening in the U.S. or the U.K. They're not going to waste money. They're going to let the chips fall where they may, and they're going to try to pick up assets on the cheap. But it's the global game. We're entering the phase 2 of the global credit crisis, and it's also the beginning of what I call the world war of currency speculators and currency wars. In other words, the war today is not really fought on the ground with tanks and guns. It's fought in the currency pits. It's fought in the currency futures pits. And you can see the euro traders and the Canadian dollar players. I notice Russia's buying Canadian dollars now as a way to diversify out of the U.S. dollar.
Okay, Max.
So they know that...
I was just going to say, you are just giving us loads of bad news, painting a real picture of doom and gloom here. It does boggle the mind, however, that the Western news outlets just don't really give the truth to the people, and there are loads of people in Washington and Wall Street who must be held to account. Max Keiser, economist and RT contributor, thank you for your time.